Hello, everyone. Tony here. US stocks soared to new highs on Friday, fueled by optimism over trade deals and expectations for Fed interest rate cuts. Looking ahead this week, the focus will turn to the labour market, with non farm payrolls set to drop on Thursday, just ahead of the July 4 long weekend. For this month, the expectation is that the US economy will add 110,000 jobs, with the unemployment rate ticking up to 4.3% from 4.2% prior. An unemployment rate of 4.3% or higher would be the first time the US unemployment rate has been outside of the 4 to 4.2% range, which we have seen over the past 13 months, and likely spark concerns that a downturn or a cooling is underway in the US labor market. Let's take a look at the charts of the Nasdaq and the S&P to see how they are as we start this new week. Okay, to recap, we see the decline from the February highs to the April lows as a correction within the Elliott wave framework, which we prefer to use. And we're looking for a 5-wave advance from off the April lows. At this point of time, we can see a pretty clear wave 1 and a pretty clear wave 2. This appears to be the wave 3. We had been looking for a wave 4 pullback last week if it was to break below this support coming in around 21,500, which it obviously failed to do on Monday before springboarding higher above this record high over here, and now looking like it wants to set sail up towards this 23,000 area. After that, we're still looking for this wave 4 pullback. We never try and short a wave 3. It is the most dynamic, the most impulsive part of the move. In fact, where we'd probably be leaning towards is a nice corrective wave 4 pullback coming into this area here and leaning against the 200-day moving average, which currently comes in around 20,600, after which we'd expect to see another push higher for wave 5. The first sign that something potentially different to what we're expecting may be playing out would be a break below this 200-day moving here average here. Now, for the S&P 500, a similar story. Here is your correction between between February and April, and we can see a pretty clear wave 1, a pretty clear wave 2, and this appears to be the wave 3, which has started to accelerate and to extend above the February record high into the back end of last week. Now, once again, there does appear to be a little bit more scope for it to continue higher before a wave 4 pullback. Now, providing this wave 4 pullback is orderly and holds above the 200-day moving average, the expectation is for another leg higher for wave 5. This is the leg where you'd be potentially looking to fade the move, looking for a deeper pullback to play out. Now, at the very least, we need to keep in mind that this is a pretty strong uptrend in place. And while it remains above the 200-day moving average, I expect the uptrend to continue. A break below the 200-day moving average would be the first warning sign that something may be going on other than what we've been expecting. Thank you for listening and have a good week ahead.